Welcome everybody to a new video of Tradomics focus on Adobe. This is a really important video that is dedicated to all of you that are following this channel and to show you the real advantage to apply cycles and quantitative trading over technical analysis. So let me step back a little bit on the first video of YouTube that I published. And basically that video was focused on Adobe. So before getting to the chart, let's have a look at the channel here. And if you go to the playlist and you wanted to have the Adobe videos, you can just go here and type Adobe. Then in the playlist, you're gonna see the two videos that I published. The first video that I published was mid-term downtrend, and it was published 9 months ago. And it was in March. And the last one was a couple of months ago, episode 59. It was issued in October 2024. And I kept saying that there was a mid-term downtrend in place since March 2024. If we go to that video, okay, March 2024, around the 6 minutes, I was saying exactly this. And I was also saying in the last video, October 2024, this thing. So I was saying that Adobe was in a mid-term downtrend because thanks to this candle here, and it was in March, 15th of March 2024, we would have had downtrend at least until 190 days up to 338 days. And basically now what we had was exactly a first T plus 4 cycle and another T plus 4 cycle. And basically the midterm downtrend can last until 338 days, which is by 30th of January 2025. So the first key message is that we can still keep going down until the 30th of January 2025. And after 30 January 2025, even before a little bit, well, we can potentially have the right time to start a reversal trend, which is not yet in place. And this is why this channel is talking about predictive analysis, because at that time, that pattern was not even existing. But thanks to the duration of the cycles, we knew that at every bounce to the upside, we couldn't open a short position. And that's, of course, operational things. But this is the real advantage over the technical analysis. This is quantitative trading, predictive analysis, statistical methodology, maths. Okay, so now with the opening of today, we will complete this T plus 5 downward cycle, negative one, and we will have from this low here, T plus 4, enough duration even to close eventually at T plus 4 by starting of next week. Of course, we will not return back to the absolute tops by next week. Now we have to see whether we will have further downtrend, and you know that we can have downtrend until end of January, excluding Bayern tongue. Because if we're gonna have another Bayer tongue, like in this case it was a T plus 1, and the Bayer tongue between a T plus 5 and a T plus 5 is a T plus 2, then we have time to potentially go down until even March, because you have to sum at the maximum extension, which is the 30th of January, even another month. So basically, the downturn can be extended at most until Q1 2025. Okay, so that is the really important key message. But the second important key message is that now the downtrend is completed, at least from a time perspective. Therefore, we can prepare by beginning of next month, eventually, to have potentially a reversal. And this quantitative analysis as always said, it's independent by news and on top earnings. Because you see here the earnings was positive, 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 positive. And still we had downtrend. So why are we falling? Because HFT, high frequency trading, so the algorithms that are basically developed by funds, fund managers, or a bank of investment and so on, softwares basically, they are coded with specific parameters, and basically the stocks or the stock exchange is basically a countdown. If you have a methodology that is able to really manage time and you know exactly what is going to happen, because here you have all the duration, the cycles, and so on, you can even foresee what is coming next. And this is the result. 9 months of analysis, correct. And I was basically telling to investor to wait to open long position without saying it, because I cannot give a recommendation, but it was imply that if you wanted to have an mid-term investment, long-term investment, and most particularly short-term investment, you, at least for long position, um, you should have waited, okay? Because we were in this situation. So this is the real advantage. And I hope the video I issued in March and the video I issued in October, flagging up this possibility or flagging up basically the development of the cycles, was successful for your trading and for your positions. Okay. Now, what can I say on top of it? This is, of course, the arrows that are left. We have had exactly this move. So we have had a bounce back to the upside for our weekly cycles. We went down from here. We have a T+2. Eventually here we have even a T+3. So for this, for this particular case, um, uh, we have now to say T+2, T+3, T+2, T+3. So for the T+2, we have 32 bars. So from next week, we can have a bounce back to the upside, but be really careful, because this bounce back to the upside can be just a little bounce of a dead cat and then returning to the absolute lows, because here we have potentially a T+3 that is still negative, as well as a T+4, as well as a T+5. Okay, so the downward cycle might not finish here. We have the sufficient and necessary condition to close at T+5. We are already close to maximum duration, okay, because we have 310 days, but still we might have another push back to this downside before having a reversal, okay? And the reversal is expected from next week, potentially, but I would say in January onwards. You still have to be careful, but now the most important thing is that we return it back to this low that was made on the 31st of May 2024 at 433.97, and that was the target. Okay, so having said that, I hope that this video can, let's say, gain some likes or even some subscriptions. If you want to follow our analysis, you can, of course, subscribe to the channel to be notified as soon as possible. And as you can see, time is everything, because thanks to those analyses, you could have earned really a substantial gain or avoid risks, useful, let's say useless risks. And if you want to have more ad hoc analysis that are not reported to this channel because the stocks that you have in your portfolio are not here, you can get in touch with us by writing an email to radomica@gmail.com. Thanks for watching and see you to the next episode.